Okay, now it's not even Friday, and you want to talk about beer again already.
Yes, but without alcohol. 0.0.
Yeah, no, you want to talk about Heineken.
Heineken. They gave a
stocks.
figure this week,
Yeah.
and one of the figures was that they, of all their sales, 6.5% is going to the 0.0 beers.
Yeah,
And they want to increase that within a year to 10%.
Yeah, I think that's a fair thought, no? And it's a good thing.
Yeah.
If you like to have your beer, you don't need to get drunk out of it. It's best.
No.
Good. Oh, very good.
Okay, but first, you want to talk about?
I want to talk about the Japanese yen. I was actually a client that pointed me out on that. Of course, it's something that you know, but it's not really something that is on top of mind of a lot of investors. It can be quite. Maybe I think it's difficult now to understand it. You take a short position or a long position, and how does it really work with the forex? And not a lot of people trade forex. You don't have to trade forex to build in a hedge.
And then you can take position both ways. So
yeah, both ways.
Sure
It's always
way you
always
take,
have to. Yeah, it's always have to. Okay, I always use the example. If you go to another country, you go to the airport there, you change the money, and then when you come back, you change it back. So that's basically what you are doing. So I have a report here in front of me on the table. I've read it a couple of times, and I've also presented it to an investment club last week. And it's called The Curious Case of the Yen as a Safe Haven Currency, and it's a report of the IMF. It's an old report, but it's basically what it says is that what you see is that when we're in periods that something is going to happen. Think about it could be a war, but also I think it's quite obvious now that the Fed is going to increase the interest rates. The ECB will probably do the same.
The Russians also did it.
The Russians did it, yeah.
They had an inflation of January of 8.8 and they increased the interest to 9.4.
Yeah,
so always a little bit more interest than
little bit
inflation. I think
exactly.
that's not a really strange
No,
method.
exactly. But what you see is that in these periods, the Japanese yen always became stronger compared to the dollar. And we saw that in a couple of moments before in 1991 with the Iraq War. We saw it in 2008 with Lehman Brothers. We saw it in 2011 August when the Greek crisis was there. We saw it more recently with Brexit. So it is something that is
also, did you also
proven.
see it in 2020 in March? Also
Not so much. I mean, it was really stable actually.
Okay.
In COVID.
The first period.
It didn't suffer.
Okay.
That's also a good thing. It was very, very stable. So that was actually a good thing because it allowed Japanese to buy a lot of assets abroad. But
it's also a safe haven.
Yeah, it's also safe haven. Yeah, it didn't affect so much, and the dollar, of course, went down quite heavily at that moment. So if you look at statistics, 70% of the times that the S&P 500 drops with 3% in a week, then the Japanese yen becomes more valuable. So at this moment, for your information, the dollar-yen ratio is 115. So $1 is 150 yen. I will show a chart with you in the video now, and you will see that in history over the last 20-25 years, the lowest point, so the dollar-yen was 80. So and the last 4 or 5 years, it's been really, really stable between 111 and 115. That is obviously also because of the fact that we know that central banks in the West, in the US, but also in Europe, have been pumping so much money into the economy. So that basically is a signal that that they're basically doing the same as what Japan is doing. That is coming to an end now if they will do that, and all signals are that they will do that. So it could be something that you could consider looking at in comparison to gold, because people think about safe haven, I want to put some gold in just in case the market goes down, but think about 2008, gold went down almost 35%. Where's the safe haven element there? So, and the Japanese yen really well, in 2008, the yen became 25% stronger. So when Lehman Brothers collapsed and the whole financial system was under pressure, the Japanese yen became 20% stronger. So I'm not saying here that it will happen again. It was, until now, always the case. So, and I want to invite you, if you have questions about this, how to do this, just call me. Call me or send me an email, and I will help you to understand it, because it's not that difficult and it's something that you can very easily do. So please do so.
Yeah, so you don't make mistakes, and you know that you do what you want to do.
Yeah, just
and
do
you
it.
think about the leverage, and then you can help it. Yeah, that's really interesting. I think it's really an added value for investors.
Definitely. And then
I want to talk only by a simple stock. Heineken.
No, but I think it's a very nice company, Heineken, and they think about. I mean, it's really Dutch. There's a lot of history with it, in the good way, in the bad way. So I give you the floor.
Yes, thank you, Martin. And what I said in the beginning, so they presented the figures,
Yeah.
and they were 5% on average better than expected. So that's why the share jumped 2 point something% on the first day this week. And the revenues grew with 12% to $26 billion, and the profit ended at $3.3 billion. So that was quite okay, and that was 80% more than 2020.
Yeah.
So the first COVID year.
Yeah.
Yeah, because the revenues come, of course, through the cans and the bottles that they sell to supermarkets, but also a big part they generate through cafes and bars.
Mhm.
And of course, last year they were more open than the first year, so that helped them a lot. 17% more sales of their own brand, Heineken, because they have a lot of brands, like for example Cruz Campo in Spain.
Yeah.
And that's a premium beer, so the margins will be probably bigger on that one.
Mhm.
And to talk about a little bit more about the cafes they have it in the UK and the Netherlands mainly.
Mhm.
And the CEO, Van den Brink, he said in an interview, he said, okay, that's still between 10 and 15% of those cafes are not open yet. So he's asking and he's thinking, why is that possible? So he thinks, or the Heineken thinks, that 10% of these cafes won't survive.
Yeah.
And that will be a big impact. And so that's not only that the cafes that they supply, but it will be on general through all the hospitality sector.
Yeah.
And that's because he also said in an interview, please, to the authorities, don't stop the support directly. And then if you read that, then you will ask, okay, but Heineken, what did you do?
Mm.
And he gave a really good interview.
Yeah.
It was really hopeful, and it's also, of course, marketing. But he said, we did a couple of things. For example, when the lockdowns began, we bought back the stock. So they didn't have anything in stock, for the price where they were sold to.
But at least it didn't. Yeah.
Yeah, and when it opened up, the first stock they gave it to the cafes. So that's also a good thing.
It's also a good thing. Yeah.
And also because they have a lot of cafes itself where somebody rents them for them, they helped with the rent. So they did quite some things. But he said on the other side, on the other hand, also the inflation, of course, is also impacting Heineken. And they said, on average, we have and a Heineken, a normal Heineken beer Pilsen is made up out of three things.
Water.
Martin? Yeah, good one.
Yeah, then yeast.
Yeast, yeah, and hop.
Hop.
Yeah, it's called hop in English, I think.
Is it called the
Yes,
same?
I think it's the same as in that.
I don't know.
Hop. So he said the 15% price increasements of our ingredients, but 95% of the beer is made out of water. So I don't see that.
Yeah, but maybe they have to buy the water, you know?
Yeah.
It's not that it's coming from the tap.
No, probably. Well, okay. But he said, for example, 15%, but we don't. That's also really, he was really nice in the interview, but we won't raise our prices with 15%, only with a few percentages.
Okay.
Okay, and if you look at the same week, out was also in the news, and they said, okay, we are helping our customers, our retail clients, because we put pressure on the producers, because almost all the producers, they increase the prices even if they don't have inflation in their back office. And because Ahold, they have a lot of own supermarkets.
Yes.
And they produce or they sell a lot of things under their own brand, and they have the whole chain of that. So they say, we know the chain, so we know that the costs of production are. So we see that for certain products there is not that high inflation.
No.
And they went quite far, because Nestlé, they took some important Nestlé products out of the shelf for a while, like Kit Kat and Maggi, and Maggi. It's not Maggie. That sounds strange.
Maggie is really Dutch.
Yeah, but it's called. It's.
But I don't think it's in the English. I think it's called Maggie.
Maggie, but I think Maggie sounds more strange.
I don't know.
But they had also good figures in Nestlé. They increased their profits from 12 to 17 billion.
That is
Swiss
such a
franc.
nice stock for clients always, I think. No, because it's very solid.
Okay, but they had problems with Ahold this week. Okay, but they had good.
Why did they take it out of the supermarket then?
Because they said they wanted to increase all the product prices.
Okay.
And Ahold said, no,
We won't
with
let
this
you.
product and this product, can't charge that inflation percentage because we know that it's much less. So I think both companies, Ahold and Heineken, they presented themselves very well in the news. Okay, go back to Heineken, to the share. The share is trading at around 98 euros. That's quite high. If you look back 5 years, the highest moment was 107. I believe we put the chart in the screen. So it's trading quite high. Normally, it's quite a stable company. It doesn't go up and down that much if you compare it, for example, to finance stocks. Based on the latest figures, €3.5 profit per share, so a price earnings of around 30, a little bit less. That's not really cheap.
No.
Assets 45 billion and a debt of around 80 billion, and that whole sector, there is a lot of consolidation always, so they buy a lot, so that's why they have high debts relatively. If you look at the market, at the consensus target price 107, and that's not that much, overweighted. So I think, to summarize, it's an interesting company, and they also didn't gave a clear outlook for this year and next year, because they said inflation, we don't know how big the impact will be, how big the inflation will be, and how big the impact will be. So they were quite careful.
Yeah.
I think, to summarize, is that the revenues will go up because more and more cafes will open, but margins are under pressure. So if you have to share, be careful, and if you want to buy it, I think you can take this in consideration.
I think you should. And also compare it with other brewing companies. Huh?
Yes, definitely.
Okay, I think that's a wrap. Thank you for watching to us. No?
Thank you, Kaspar Zetam.
See you next week.
If you want to leave a comment, and we put Martin's mobile phone number on the screen.
I'll leave my mobile phone. You can call me.
For the hedge. Thank you very much.
Thank you.